Mr. Cope, thank you for joining me again for part four, where
Thank you.
we are delving deeper and helping our members to cultivate good financial habits to make informed financial decisions.
Thank you for having me again.
All right, let's kick things off. Why is it important to set clear financial goals rather than hoping to save?
Okay. So, one of the key components of investing is to have a design whereby clear goals are set for them to be accomplished. Another aspect of setting clear goals is that if the goals are not properly set, you have nowhere to go. And you have to be working towards something. It's not like you're planning for a dream vacation in Greece. How do you get there? So you have to start and finish somewhere in order to ensure that your personal goals are set.
Mr. Cope, may I ask you to just give us an example of how it is that one can go about achieving a realistic goal? Any
Okay,
of your choice.
sure. Um, and a practical example for this would be young persons buying motor vehicles. Um, yes, you have the financial institution that will give you 90 to 95%
Mhm.
of the car payment, but uh, ownership has to do with self.
Mhm.
So you would have to know, break down practically how much money it is that you need to get that 5 or 10% that you would need to purchase the vehicle. Most persons' salary income ranges from between 80,000 to 150,000, you know, in terms of what they would need to get. They'll qualify for the loan very easily. However, they have to apportion a section of the loan for themselves. So you have to start somewhere to finish somewhere.
Mhm.
So they could start with $5,000, $10,000 out of their salary monthly for at least 13 to 15 months in order to get to the car payment. Once the loan is processed from the financial institution or institution in terms of bank or credit union, then they can get the full sum to continue with their payment to qualify after they qualify.
Thank you very much, Mr. Pope. And again, it goes back to discipline.
Yes.
What is the difference between short term and long term financial goals?
Okay. So the short term goal is usually something you want to cover within a year. Whether it's starting school,
Mhm.
whether it's joining a partner, whether it's acquiring some form of tangible item, and it's usually within a short space of time. It can go further than a year, but no more than 2 years. Long term goals now is something that's in the future that you want. That dream home, that dream car, you're planning for a family down the line, which is usually after 5 years. So anything outside of 5 years is seen as a long term goal.
Mhm. I want to find out from your perspective how early should one start planning for a major milestone like retirement or even purchasing that dream home, which you would have mentioned earlier?
That's a very good question, Janelle. Pension age now is 65.
Mhm.
So if someone is a young person who's 20 in their 20s, so to speak, not me, but someone in their 20s, they tend to, and they're confirmed in their job or their role where it's permanent. The requirement is that you can't throw more than 20% of your gross salary in a period. So starting small, what I suggest to persons is each year you go along, you throw more. So you add a percent or two to the sum that you want to send. So you could start with 5% at the lowest point, and then add 6, 7 in year 3, 8 in year 4, till you get to that 10, 20% in the long term. Because as you grow in your role, your income grows with you. So that's my suggestion persons.
Hmm.
Start small
Mhm.
and then add a percent or two each year that you grow in your job. It's gone are the days where you're in a job for 30 years.
That's true.
No, it's if you make it in a job for 5 years, 10 years, consider yourself lucky. So that means in 10 years of your job, you should have at least an additional 15% leaving that role into retirement. And if you transfer the pension, that's that large lump sum that you
Mm-hmm.
have, keep it going. Don't stop. You can reset the clock
Yes.
because, of course, your income is going to change again. But reset the clock and continue with it. So move the money. I mean, a lot of persons might want to get some stuff out of the way, especially young persons that you deal with. They want to move out of their parents'
Yes,
home.
it's
They want to
true.
get a place to rent. They need a bed, they need a bed frame, they need a stove, they need
Mm-hmm.
a fridge. But if the pension can give you that, get your assets because assets are also good. It helps you with your diversification into society. So that's what most I would suggest to anyone or recommend to persons to do.
And my follow-up question on that is, how early should someone consider speaking to a financial advisor, wealth advisor, to guide them along making sound practical decisions?
Right, so if they haven't started as yet, I would suggest that they start today
Okay.
because it's very important to set the foundation for your future.
What should someone prepare before meeting with a financial advisor?
Okay. What we always suggest to persons before they come to sit with a wealth advisor is to allocate at least 3 to 4 months of their salary down before starting to invest. Because usually there's a minimum requirement in order to start an account. And if you don't meet that minimum requirement in an investment house, you can't start. So it's best to put down at least 3 to 4 months of money down so that way you can start today.
When you say 3 to 4 months of money, do you mean full
Right.
salary?
No, not your full salary.
Okay.
I'm referring to after you take out your income with
Okay.
your expenses from your income. So your everyday expenses is like your rent, your food, your gas, um
Bills and so
your
forth.
bills and stuff.
Mm-hmm.
And your income gives it starts at say 150.
Mm-hmm.
Once you take out all of that, what is left with your disposable income is what you would put down. That you would save. Remember that 20%
Yes.
that we were
40,
speaking
40,
about
20.
earlier?
Mm-hmm.
Right. So the 20%, that's what you put down. That's called your disposable
Disposable
income.
income.
Once you put that down for the first 3 or 4 months, then you have a large lump sum to start with. And of course, you meet the minimum requirement, which is where a lot of persons like to start the minimum, and then it grows over time.
Is there anything that you would like to share with our viewers who are watching? Any other advice that you'd like to share with them on the
Well,
growth to financial
at
journey?
QMax Wealth Management, we make it more possible for our young persons and individuals alike. All you need to do is to speak with Janelle. You can pass on our contact information. We're located at 10 Ruthven Road, Kingston 10. I'm a wealth advisor again. My name is Orion Cope, and I'm there to assist anyone who is willing to set that first goal.
Thank you very much for joining us, Mr. Cole. And there you have it. We have just concluded our short video series where money meets love. With these financial tips, we trust that you are on your path to making sound financial decisions. I'm your host, Janelle, signing out until next time.